Not going to waste time on this video. I've narrowed down my top 3 setups you need to be watching for the month of October if you want to see every single entry and exit I take in the real time, not just these videos. All of that is posted inside of the Discord. The link is down in the description. Now let's get to the video. After topping out above $100 back in 2021, JD sold off for years, dropping all the way into the 20s. But over the last 18 months, something important has been forming, and that is an inverse head and shoulders pattern. Not to mention the last previous earnings reports were great. You got a left shoulder in mid 2022, the head down at 2023 lows, and now the right shoulder building through 2024 into 2025. This is one of the strongest bullish reversal patterns you can find on a higher time frame like the monthly chart. It's basically the market telling you the downtrend is exhausting and buyers are stepping back in. Now, if you zoom in on the most recent price action, inside that right shoulder, we're also seeing a falling wedge, another bullish setup. On a monthly time frame, these kind of wedges can produce very powerful breakouts once price clears the upper trend line with conviction. Now, here's why all of this matters. The inverse head and shoulders gives you the macro reversal blueprint. The falling wedge gives you the micro entry area. Together, they create a high probability setup for a multi-month move if it confirms, in my opinion. In the Discord, we've been in this trade for weeks, building our position in that base zone. We're now up over 100% profit because we didn't chase spikes. We bought the base when no one was watching. Right now, JD is sitting around $35. A monthly close above that upper wedge line with volume opens the door to $45 to $50 and possibly higher over time. If it fails and breaks down, you know exactly what your invalidation level should be. And if anyone's thinking about starting a position into JD, give yourself time. Use longer dated expirations. I can't tell you how many people blow up accounts picking weeklies or contracts just a few days out, hoping for a Hail Mary only to watch the trade run exactly how they predicted the following week. But the difference is they're not taking advantage of that upside. This is a long-term reversal pattern. Treat it like one. Give yourself the time for the setup to play out. Next on the list is Tesla, ticker symbol TSLA. On the daily chart is a perfect case study of why you want to watch patterns and levels instead of headlines. After months of chopping around, Tesla built a massive symmetrical triangle between roughly 300 and 370. Each dip was bought a little higher, each rally capped a little lower. In late September, it finally broke out of that triangle with a huge burst of volume, running straight through 400 and topping near $470. That's a textbook breakout followed by momentum run. Now, if you look at the most recent candles, price is cooling off and consolidating between roughly 420 and 440. This is a healthy pause after a huge move. If this holds as support, it can act as a launch pad for the next leg up towards 480 to 500 in my opinion. Here's the part I need to stress, especially for those trading Tesla options. If you're thinking about trading this kind of setup, scale in and use long dated expirations. Don't go all in on short dated contracts hoping for a quick spike. This is a big stock with great patterns. Treat it like one. Give yourself time and room for the setup to develop. Tesla broke out of a huge multi-month triangle. It's now consolidating above the breakout zone. A sustained move above 440 with volume could open the door to 480 to 500. But the way to trade that edge is with patience. Scale into your position and choose contracts that give you weeks or months for the move to work, not days. Next on the watch list is ticker symbol OSCR. After that massive slide from the 50s down into the single digits in 2021 to 2022, the stock spent more than a year building out that huge base between roughly 15 to 24. Every time price dips into the lower part of this box, buyers step in. Every time it spikes, sellers cap it near the top. That's a classic accumulation zone. We're now trading around $21 and pushing back up toward the top of that range. This is exactly the type of setup you want to be watching for a potential breakout. On the monthly time frame, a clean close above 24 with volume could open the door for a much larger move because bases that form over many months often lead to a powerful multi-month trend once they resolve. But here's the part most people miss. When you have patterns this big on a monthly chart, you can't treat them like a day trade. You need to think in terms of time. If you're playing options, once again, go with longer dated expirations and scale in. OSCR has spent over a year building a strong base, and now it's making another run at the top of that range. A monthly close above $24 with volume once again is your signal of a potential trend change. Scale in slowly, and if you're using options, options, choose expirations far enough out to let the move unfold. If you got value from this video, do me a favor, let's hit 100 likes on this one. It helps pushes the channel out to more traders just like you guys. And if you haven't already, subscribe so you don't miss the next setup, and join the Discord. The link is in the description if you want real-time entries and exits on all of my trades. Thanks for watching, and I'll see you guys in the next video.